Hi guys, welcome to the Saving Money Show. Me, your host Sean. Today we're going through a new research tool which is called Genuine Impact. Now, full disclaimer, I have invested in this seed round. I am not a major investor by any means, just a small amount to dip my toes in. I do believe in it. They do have latest analysts from world's top investors, including BlackRock, Fidelity and Vanguard, as well as others. Now, it is a free research tool, however you can upgrade to the premium. I believe if you refer a friend, you receive up to a 1-year premium subscription. You receive 1 month for every friend, up to 12 months. However, it's not bad, you know, it's a free tool. What do you want? Yeah. And basically you go into one of their cards, or you can just look at the front and it will tell you. This tells you about Apple. It's a quality stock because it's got the shield round. Now, I'll compare it to other stocks as well. Now, value wise, it's not quite so good because it tells you here how it's out of 5,842 stocks. So quality, if it's in top 500, then if it's 500 or below, then it's high. If it's above 4,000, then obviously it's low. So it's low value by their opinion. So, but obviously people are looking at it for its growth over the years. But then you've got its momentum. Its momentum isn't the highest, but it's still got fairly good momentum, which is why it's 1,761. Because it had the top stock split and because it has the new iPhone coming out. Now, you see here what I just said. You've got the quality is top, value foul, momentum is neutral because it had huge momentum and now it's kind of stagnated. And you see it down here, it tells you everything. How dividend cover is great, but the yield isn't so good. Yeah, and you can go through all this at your own leisure. Profitability very high. Well, we know that the balance sheet is amazing. Financial strength medium. Well, that's correct as well because they're spending money on new products. Capital allocation very sound. Value, because it breaks down each little bit. Value, that was the quality of the company. Value, very expensive. A lot of people have said Apple is very expensive because you've got to think of it how much it was pre-split. Then you have the people who are saying, well, Apple has always been considered expensive. So what they do is they break down how expensive it is by its income statement, by its balance sheet and its cash flow. You have the momentum of the revenue, the earnings and the sentiment. So it's got a strong momentum for the revenue and the sentiment, meaning how the share price has been going, and then on the earnings. And you can go into details of any of these and it will show you details of each of this, you know, but we're not going to all of that. It's got historical growth, share price and return, share price stability, liquidity, the size, you know, well, it's ranked the top company in the world, you know, all of these here, and it gives you like information about all of this, whether it beat or missed consensus history. Obviously it's beat both, and whether they think there's going to be a rating change, you know, and what regions revenue is. Now this is interesting because I said before how China-US trade war could affect Apple, and knowing that 17% of its revenue comes from China. Now, losing 17% of your revenue isn't good, but knowing that it is only 17% wouldn't prevent me. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now, we're going to go to Apple and just choose any other card. And we'll go to the next card. Remember, 346 quality, 4,743 value, 1,761 momentum. And go to Diageo, another pick of mine. Quality, 2,081. Now, I believe it's a quality company, but obviously it's not as high quality as Apple. The value, 4,464. Well, you know, I think it's undervalued, but then I understand some people thinking because of what's going on and because they've paid so much for these distilleries, you know, it might have overpaid. So I understand that. The momentum, well, it has good momentum. So it's saying it's a good quality company, but it's not the top quality company. If you're going for a medium quality company, this is one. However, you're not getting great quality for it, but you're getting the momentum. So what you want traditionally is either all three coming down to the halfway line, or at least two coming just past the halfway line. You kind of want like you want all three lines being partially filled, and you want them to make up a certain amount, and it has a stable share price. It's liquid, and it's a huge size, as you can see. Yeah, they consider it expensive. Yeah, it's had some huge momentum, but now people tend to have gone out of it. We have a few factors there. You have Brexit. It's a UK company. You have Brexit. in America, you have people concentrating on American stocks, and you suddenly have the Spaq resurgence, people taking money out of this to go into Spaqs. It won't pay another dividend until next year, so people losing faith with it. Now, oh, that's interesting. I didn't even notice that one. Another one that I spoke about earlier as well. You have all the other stuff down here as well. It's missed on revenue and earnings per share. Again, we've got all the information here. I'm going to go into one more, which is stock spirits. I didn't even know they had it on there, but apparently they have all the companies on there. Where did I see that? Here it is. Now, I mentioned this as a Brexit play. And look at that. How good is that? I didn't even check it on here before mentioning it. Look at that. How good am I? Now, 3 shields out of 3. Now, this was my Brexit play to go with. Stock spirits. I wanted this because if there's a no deal, which looks likely, they are located in London, but all their distilleries are scattered around Europe, so there's no tariffs. They're mainly in Poland, but they have it around Europe, so they won't have tariffs. Now, top quality company, like that, top quality. Top value company. I like a bit of value, me. I'm very savvy. Now, momentum. Look at that. Because of no deal Brexit, everyone's jumping in. And look at that. Oh, that is so good to see. Now, that validation is so good to see. They missed on earnings per share but beat on revenue. I said that in my video. Now, see, Central and Eastern Europe. I also said how, because the Eastern Europe side of it, if you want to hedge a bet against the Russian vaccine coming out and Russia suddenly opening up before any other country, the Eastern Europe side of it as well. Now, I hope this has been helpful for you. I do like this. For a free research app, I think it's very helpful. And the thing is, if you're looking into the look at this, annual for life. Now, no offense, but they usually charge £200. Whether they do or not is another thing. But I've known companies before to charge it once and then not charge it again. You know, like you have the DFS sale. But they do have to have charged that price to have a reduction. But they have £9.99 annual for life. That means if they put it up to £200 again, you'll still pay £9.99, which is less than £1 a month. You cannot argue with that. Now you get your watch list with the free one, the insights, and if you want the premium version, you get the stock and fund details, stock and fund, and the collections for £1 a month. How much is Simply Wall Street? And I came off of that because it wasn't accurate. And if the valuations weren't accurate, what else wasn't accurate? Now, for those of you who say, yeah, but they're not going to charge £200 a month. Hold on. This is a new app, which in my opinion is very good. And it is just my opinion. You may not hate these shield things. You may hate the circular thing. But I find them pretty good, pretty different from the rest of them. And the fact is, more and more people that go into them then the more likely they are to raise the price. Maybe not to 200, but they may. I've seen it with other companies, and I thought then, I wish I'd locked in that price. A gym I went to, it was they offered me £50 membership for lifetime membership. I didn't, because it was just as cheap for me not to have the membership and do the £10 weekly anytime I wanted to go there weekly. And what happened? More and more people went there. In the end, I couldn't afford to go there anymore because the membership prices went up. They got rid of the £10 weekly, as you can see from my voluptuous figure. Anyway, back on point. I think this is well worth it. This was a lock-in price till the 1st of November. I contacted them and notified them there were some issues with the app. The only issue with the app was that if you didn't have the latest version of the latest update of Android or iOS, and a lot of people don't because it has the track and trace on it, then you can't download Genuine Impact. So I spoke to the guy and they've extended it for another month, but don't expect them to extend it again. Just for your information, I will be going premium. I will be paying for it. I don't see why you wouldn't. What happens? You lose a tenner. That's the worst case scenario. Now, this is the time you get in. It's the same with Spaqs and some of the stocks. You get in early. You secure that low price. Still, you have to make your own decision. You could even do the monthly for life. It's only £2 more expensive a year, and at least you secure it. And after your 14-day trial is up, if you're happy with it, you go on a monthly, and at least you've secured it for life. 90% off. And as I said, there's a link in the description below where you get a month free, and then you can send that link to anyone you want. And I'll see you in the next video. That's all for now. I hope you found it helpful. That's all for now. Stay safe, stay savvy, stay investing. Goodbye.